Hello everyone, welcome back to Bootcamp episode 3.5. This bootcamp is specifically about gap ups. Uh, really love the feedback that you guys gave us in the previous episodes. Really love the support that you guys gave us. I'm trying to keep this short and simple. Not trying to go explain everything again all the way from the start. What a gap up is, what the gaps are, etc., etc. So before we start, please like, comment, and subscribe. If you have any questions, let us know in Discord. We're there pretty much every day. Let's get into it. Very short and simple, you could see. Gap ups are split into two outcomes based on market context. So whether we have a gap up, there are only two outcomes that I'm interested in, which 90% of the time falls under these. The drop and pop, the pop and drop. Remember, the drop and pop, buy is longs. Pop and drop, buy is shorts. So what I mean with this, when we have a drop and pop in a gap up scenario, so if I let's say zoom into this, you could see that this was yesterday's close. And you could see that this is today's open. This opening difference, this delta in price change is a gap up. So we already know, okay, we have a gap up. You could see in this example that we had a tiny drop. Let me see if I can open this picture. Yeah. So you could see in this example that we had a tiny drop and then we went up. This falls under my case one, the drop and pop. Drop, pop. This is my case one. Remember, this is the case one. So in the case one, what do we have? We have a drop and pop, bullish. That's why I took longs on this day. And then if we go back to the other example, the case two, this is where you could see yesterday's closing price, today's opening price. Every time I've marked them with these yellow lines, so I don't need to be explaining what these yellow lines are. But you can see we have a change in price again. We have a gap up. But you could also see that we're in a bearish downtrend. So we have a bearish downtrend and then we have a gap up. So you could already know that, okay, I want shorts, but I have to see a setup. So you could see that in this case two, we have the pop and drop. So this is exactly the opposite of the other one. We pop and then we drop all the way down. And this is for me bearish setups. And I'm gonna go over. I have plenty of charts ready for you guys. I'm gonna go over them in a bit. So for a pop and drop, the bullish case, price drops at open, holds key levels, grinds higher with bits buying price up, bits stacking. So this is longs. So you can see price drops at open, as we had the example here, holds key levels, whether it's pre-market high, whether it's VWAP, whether it's a yesterday VWAP, whatever it is, it drops and then holds. And this is what we want. Whether it holds pre-market low, whether it does an FBD through pre-market low, it doesn't matter. What if you go back over to my other episode 3.1, where I went over my entry model and my setups, it could be anything of my playbook. So whether it does anything and then it grinds higher with bits buying price up, I want longs. I want to be in those longs. And then you've got case two, pop and drop. What is a pop and drop? Price pop at open into key levels, whether it's a fill of pre-market high, just like this example, whether it's a pushback to yesterday high, whether it's a pushback to view up, whether it's a pushback to yesterday view up, whether it's a pushback to the EMAs, whether it pushes back, doesn't feel breaked out in that intraday and then goes back down. I don't care what it is. For me, what matters is I want to pop at open and then I match my playbook to that type of setup. And then you could see I want it to fill and move lower by shorts, just like this example that we went over. Let me see if I can pull up some charts. So we're going to start with a drop and pop, our bullish bias, 6 October IWM. First examples I have ready. Let's see. There's the first example. Let's see. Let me increase my. So you could see, well, you could see we have a massive gap up. Once again, I'm not going to go over explaining what these yellow lines are. Those are the closing price and opening price. So this change is a gap up. You could have a gap up. Very nice. What do we see here? Let me do it in green and red. What do we see here? Yesterday high. We failed to break out of yesterday's high. So for me, this is already a nice setup. So look, this is already gapping up. For me, I already know, okay, look, I want longs on this. What does it do? It pops and it drops. Unfortunately, I missed those trades. I should have been short on those trades. But just because I missed shorting this doesn't mean I'm gonna go chase shorting here, 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 here. I'm not gonna do that. I'm not gonna be randomly shorting this because I already missed out. No, what matters is the opening price. So it pops at open, drops, I miss my shorts. So be it. What does it fall under now? It holds my yesterday view up. What does it do? It drops and then it pops. There's a whole V-shaped recovery. And I that. I saw that. So what did I do? I longed. And you could see I was very good sized, 15 contracts. As you could see here, took my longs, made my money, made around $1,100 on that day. Very nice trade. 6 October, IWM. Let's go to the 15th of October. And I see I have two trades on them. Let's see what they are. There's the second trade executions. There's the first trade executions. Oops. First trade executions. And then we've got the main chart. Let's analyze it. Closing price, opening price, opening price. You can see we got a drop. We first initially fill yesterday high. We reclaim view up, we go back up. So you could see you could have had already your entries based on this. Filled pre-market low breakout, view up break, pre-market high break. So this drop and pop long buy setup, you could have already positioned yourself either way, whether it's a 1 minute bar here, whether it's a view up here, whether it's a pre-market break, pre-market high break here, whether it's a reclaim of yesterday's high, which falls under another high technical textual setup that I will go over to in another episode. But you could see that this pops down, goes all the way back up, and I don't care what happens here. Yes, we rolled down all the way, but I don't care about that. What I care about is that initially at the open we dropped and then we popped, and I made my money here, and that matters for me. You could see initially on the day, very annoying. I took an L on it. I had a 1 minute bar. I took it. I was up around 50 points from what I can see, and then I took my L when it broke intraday low. So be it. I still had a bullish bias, so I didn't start chasing shorting this. No, I still had a bullish bias. So what did I do? You could see my second trade. Entered here, which is right around this FBD here. Entered right around here. Covered. Made back everything what I lost here, plus some more. And this is what my risk management, this is what differentiates me from beginner traders. Let's put it that way. You could see that, yes, my bias was right. I just had the wrong timing for the first trade, which can happen. You know, I take my L. I'm not going to be stubborn. I'm not going to just keep on adding, because it's just going to blow up your accounts. But I was patient, started accepting that my timing was off. And if it didn't work and it rolled all the way down, so be it. You know, I'm not going to take a trade and I'll just walk away with an L day. And then you can see that it rolls over. I retake my setup and I get my partials out. And this is how you should be approaching every trading day like that. This is what keeps you in the game. Let's put it that way. 15th of October, the same day, I had IWM longs. And I remember this day, matter of fact. I had two trades on them as well. And then you could see, what do we have? We have a massive gap up. Once again, opening price, closing price. You can see we got a tiny drop and then pop back open. We come back down and I'm still very bullish biased. It goes back up, holds pre-market highs, goes all the way up and then rolls over, which I don't care about. And you could see from my trade, my first trade entry, this is my first trade entry. You could see that immediately as it broke out of pre-market highs around these levels, I took my long and it went up, up, up. Remember, this is the 3-minute chart that we're watching. This is the 1-minute chart. You can see I took my entry right around here, went up, came back down, went back up all the way to a high here. And I went out break even because I was expecting a bigger move and I didn't get it. And I'm not being stubborn about it. I take my L. I take my break even. It rolls over. I don't start chasing longs. I don't start chasing that. I wait for my setup to come and you can see I take my entry right here and I make a ton of money. Let's put it that way. And my entry was based on the pre-market high break. So you could see that we're in a gap up. It pops, it drops, and then it pops. We're bullish on the day. And you could see I'm trying to find where price action matches my style, matches my playbook, matches my entry model. So when we pop up the first time, I take my entry. I was already up decent in the first trade, but I went out break even. Can happen. And then I didn't start chasing it. I waited for something to happen that I recognize that falls under my playbook. And you could see we go down, you reclaim view up, which could have been a nice entry, but I just took my entry as it broke pre-market highs and I was able to make a low ton of money. Very nice day. Let's go over to the 24th of October. Gorgeous trade. Those are all drop and pops, bullish cases. You could see again, change in price. We're gapping up. We have a drop. We go back up. And you could see we drop and we start chopping for the day. But we do grind slowly going up. You could see that we took our long right around here. As it broke pre-market highs, got a tiny scalp in. And I'm happy that I only took a tiny scalp right around there. Why do I keep pressing that? But we took our scalp right around here. It went all the way back up. And then the moment I saw it fill pre-market highs, I was like, okay, this doesn't want to continue. I'm going to take my money and run. And you could see good decision on me for that day. Very choppy PA. I would have probably lost money trading this area right around here. So I took my longs as it did a drop, pop. I saw the momentum. I saw bits stacking up. We're in a bullish market overall, so I was okay with a deeper fade as well. Didn't get it, but very nice trade overall. That's our example of drop and pops. Let's go to the 12th of November. Again, so as you guys can see, on the 12th of November, this is the closing price, this is the opening price, and price just dumped immediately. Very nice to jump. But because it never really popped to fill those pre-market highs, this immediately for me was like, okay, this just seems like a nice pop and drop type of setup. So you could see that it popped, came into yesterday's view up, and this is where I took my first trade. Took my long, got everything out. Those are the executions. 5 contract, was able to secure around $650, $700 on this. Very nice trade. And very nice. Was able to really hold it through view up, and then it just sold off, continued, and dropped around for the day. What for me matters was the opening price. It dropped all the way. I knew, considering this heavy sell off and considering that we're in a gap up, that we could either pop and then go back, or we could drop and then go back. And this just never popped to continue going down. All it did was immediately dump. So I was like, okay, this will give us the long, and I just waited until it fell under my type of setup, and I took my entry right around here, sold everything here. And this is why it's very important for you to be waiting for your trade to come to you, which a lot of people struggle to do. Let's put this here. To December executions and the chart. Once again, same old same. Closing price, opening price. You could see we dump, we go back up, we chop, go back up, come back down. And then for me, the most important thing was I already knew I wanted longs. You could see we get our drop, we go back up. I take my long, I exit, and I made around 40, 50 points on the massive fumble on my end, as you guys could see. But happy with it. Money is money. Also a learning process for me. Should have hold this way longer, and even re-add this, to be honest. Even re-add this right around this area here, but learning process for me. And then I remember that once it went all the way up, came back down, even though this doesn't have anything to do with this higher time and contextual setup, doesn't have to do anything with the setup that we're talking about. You could see that because I was very bullish on this day. You could see that the moment it went into view up, reclaim view up, I even took some other longs, which I can show right around here. You can see, took my longs and then exited everything here, which sucked. I was risking these lows here, which is a nice trade, 1-to-1 here and then a 2-to-1 here. But you could see that the idea would have been a 10-hour trade. Happy with the executions overall. And you could see then we just roll over, and I don't care what happens next. For me, what matters is the opening price, and then whatever one happens next, that's nothing to do with me. Very nice example. So if you want, pause this, study it, because it's a very nice example. It's from 2 December on the MNQ. You could go and look back yourself as well. Then we're going to go into the 18th of December, the last example for today. And let's pull it up on the chart. There you go. What do you see again? Closing price, opening price. We get a pop and then drop, and unfortunately I missed that. But then once I realized that we're holding bids, I was like, okay, it comes all the way down, holds bids, goes back up, comes back down, goes back up. And for me, I knew that, okay, I missed the pop and drop, but I'm not gonna miss the fact that it's dropping and it's gonna go back up. I take my longs, and I'm made around $740, as you could see, maybe something less. This is probably, I made around $700 on this, but regardless, very, very nice trade, instant trade that worked out, nearly zero drawdown. And it kind of shows that even though once the trade setup doesn't work initially, what's in my mind, I'm not letting this just defeat me and start chasing shorts. Uh, where, as I said, if you chase price, you only have two outcomes. You either lose money or you win very small. So please don't ever chase. You can see I could have got tilted that I wanted shorts initially. I wanted the pop and drop setup, and I just missed it. And if I miss it, doesn't mean I'm gonna go short heavily trying to make it work. No, I just wait. If I see it holding up, see it fall under another setup, I take it. In this case, you could see a perfect drop and pop scenario where I was able to capitalize on it. So this was it about the First case, pop and drops. Let's see. I'm able to bring my mouse back. Yes, this is the first game about the drop and pop where we're only looking for longs. Now we're gonna go over the pop and drop, which is primarily short, where you want a pop at open and then short. So 2nd of October, got the charts ready for that as well. You could see that we get a nice, we never really got a nice pop, but however, I remember that this was a multi-day gap up setup. So we gapped up the first day, we gapped up the second day, and this was the second day gap up. So usually, remember always with 2-day gap ups in a row, whether it's down or whether it's up, so whether it's a gap down or whether it's a gap up, very high possibility that it just reverses for a bit and then does whatever it wants to do. So in my mind, I was like, okay, I definitely want shorts. If it popped all the way up, fill those highs, I would have shorted. If it just reclaimed VWAP, I would have shorted. If it went all the way up, reclaimed, I would have shorted. So I was already looking for shorts, and you could see that the moment it broke VWAP, I was already in short. So it went down, it broke VWAP, I was in short, and I made my money. And I was done for the day. Literally. Like, I got my setup, because if I start trading this, I have no reason to be trading this. The meat is already gone, the meat already happened. You either trade the meat or you're going to be trading, eating off the bones. So, very nice setup. Then we're going to go over the 27th of October, which I've marked as an L. So this could be quite interesting. I'm trying to show you guys also the real side, setups. It might have been a valid setup for me. And the reason that I'm including this in this episode, in this bootcamp, is so to explain why I took an L. Let's put it that way. So you could see that in this case, price gapped up massively. And you could see we had very ugly choppy price action, and we grinded up, which is annoying price action. I know that, most traders lose money on days like that. But in my case, I was very short. So I got a massive gap up. We get our pop, and then we get our drop, and we keep on losing VWAP every time. But it's just so annoying that we fill pre-market highs here again, and then we lose VWAP, and we never roll over to go down. All we do is we go back down, reclaim back up, down, reclaim back up, grind, 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 reclaim back up. So you could see that I gave it a short. I lost around I lost around $180 on it, and if you look at my previous winners, $180 is nothing. So my risk is managed. But you could see that the moment we fill VWAP and we reclaim, we fill VWAP, I never get a continuation down. Immediately goes up, and that's where I was like, okay, you know what? This ain't it. This price action is ugly. I'm not gonna be forcing it. I'm gonna take my L, and I'm gonna go into the next day, and the next day I'm gonna probably have better PA, and I'm gonna make loads of money. As you can see that, yes, this was a nice pop and drop setup. It's very normal that it sometimes doesn't work. And this is where risk management comes into play. Nothing is guaranteed. Nothing in trading is guaranteed. So it's very normal that this setup doesn't work. It's just for you to determine how you're going to risk your setup, how you're going to risk the type of, how you're going to determine your risk for every trade, and how you're going to play it. And for me, you could see that I'm playing it based on setups that I trust in, that I take a trade based on a setup that I've studied the past couple of years. So very normal that it doesn't work. Very nice setup for a drop and pop as well, where you could have longed it, which we went over in the case one. But I was just wrong on it, and I didn't want to trade it anymore. Let's go into the 10th of November. 10th of November. Let's see. What do we have for the 10th of November? Small money again. Fumbles again, which I'm already seeing. But you could see closing price, opening price. We're very bullish. You could see that market is regaining strength. But what matters is we get a tiny drop, we get a pop. We missed that. And I'm okay not longing this, considering this massive gap up. So what do? I wait for the pop. It does the pop, and I start shorting it backside right around here. So this is where I start shorting it. And you could see that shorting it right around there, I'm short. I take my money because I was scared that this is insane strength and it's holding up. I saw the bits holding up, and you could see from these I was like, I'm done with it. And then it starts rolling over for 120, 130 points. Sucks for me. But regardless of that, very nice trade. Let's put it that way. I was able to short this on the backside. It popped, and then it dropped all the way. And this, you could see that it falls under your pop and drop setup, where you take shorts. 20th of November, the first trade is this. Let's see. Along with the first trade execution, we have a closing price, opening price, we pop, come back down, pop, come back down, and drop all the way. And you can see I have two trades on this. I'm going to show you the other one in a bit. This is the first trade that we had. We took our short, took a tiny L. This was supposed to be a tiny. You could see like in my screen, you could see that I'm already up to $150 on this. And unfortunately, this thing all the way reclaimed, which is around here. It filled view up and it never continued going down. It reclaimed. I take my L. It was supposed to be a break-even trade. Unfortunately, I got slippage, and I took a $50 L, which is part of the game. Can happen. But for me, what important was that at the moment it filled pre-market highs, I was like, I want to be in shorts again. And then once again, it went view up, came back down, and then this is where it rolled over. Very annoying that it took that many tries. But let me see how I executed the second trade, and this is where I really killed it. Let's put it that way. You could see, yes, I lost $80 on the slippage trade that I made back 380 on this, though $300 plus the difference. So you could see that risk management really takes a important role in trading. The moment we started failing pre-market highs, as you guys could see here, the moment it started failing pre-market highs, I took my trade, and the moment I took my trade, which was right on here on this 3-minute bar break, took my 3 contracts, same size. I didn't a revenge trade where I had 6 contracts, 7 contracts. No, I'm trying to keep my composure calm, and I took my trade, went all the way down, came into view up. I was like, oh, I'm not gonna make the same mistake. Took everything out of view up, was able to walk away with $300 plus trading day, which is gorgeous. Which is gorgeous. If you multiply that by 10, 20 accounts with prop firms, that's a nice 12K, 6K, 12K day. So you could see that, yes, initially we filled. So it gapped up. We had a drop. We had a pop. We had a drop. And the first pop and drop didn't work. The second time, the moment I realized it's failing pre-market highs, which falls under my type of setup, I retried it. And you could see that I made 4 times more than I lost, 5 times more than I lost. Gorgeous day. Let's see. Then we got the 15th of December. Executions right around here. This is the chart of the day. You could see a very nice example again. The pop and then it drops all the way. Very easy. This is the nicest example with cleanest execution. You could see that I caught nearly the top, risking these highs for probably 20 points, something like that, and I was able to make 60, 70 points. Yeah, it was 70 points. I was able to make 70 points, and it was a nice $450 day for me. Looking back at it, yeah, obviously, I should be re-hitting this, and the moment it rolls over like that, I should be making way more, but I'm happy with it. Very nice example. Like, this is very clean example that you guys could study as well. Pops, fills pre-market highs, comes all the way back down. And those fail of pre-market high or fill whatever, the things we went over, those are all discussed in my playbook, in my entry models, in the previous episodes. But for now, what matters is the high time frame contextual setup, which is the gap up that we have around here. This is the closing price, this is the opening price, and this change in price gives us the high time frame contextual setup, gives us the gap up, and then it falls under 2 cases. Remember, 2 cases. Let's go over them back again. A quick summary. That was the last example. So we're gonna go 2 cases: the drop and pop, the pop and drop. Remember, the drop and pop, which is the drop and then pop back up, are for longs, and then the pop and then drop. The right example that we went over. Pop and the drop, those are for shorts. Literally that easy. All you need to do is familiarize yourself with them, study them, and then at no time this is gonna be in your system, and you're gonna be catching massive trades. I hope you guys like this. I hope you guys learn and get some value from this. I genuinely hope that you guys are able, we're doing this all for free. We're doing it out of our own free time. I hope you guys are able to pay us back by just liking. A simple like, a simple comment is already enough for us. If you want more information, if you want to join a community that's driven, a community that's trading a real price action instead of fairy tales, join our Discord. And I'll catch you guys in the next one. Bye bye.